No stock tells the story of this market better than CoreWeave, the AI data center play that I mentioned at the top of the show, the one that just barely managed to come public at the end of March. For those of you who don't remember, CoreWeave basically builds data centers using Nvidia's hardware. Nvidia's a big shareholder, by the way, then rents out AI-level computing power to its customers, including some of the largest players in tech like OpenAI. Unfortunately, by the time this one came public at the end of March, the AI infrastructure story had been in the doghouse for a couple of months, and people were starting to worry about whether the president's trade policy was going to hurt this business, too. They had to cut down the size of the deal dramatically and also slash the offering price just to make the darn thing happen. Boy, it came close to failing. Well, CoreWeave saw a nice pop a couple days after its IPO, climbing quickly up to the $60 by April 2nd. That led directly into the Liberation Day tariff announcement that sent the entire market into a tailspin. Over the course of the next few weeks, the stock plunged as low as $33 and change. That's $7 below where its IPO was priced. But that's when the market started to regain confidence in the AI infrastructure theme, largely because when the hyperscalers, those big companies we talk about all the time, reported, they kept reaffirming their plans to spend tens of billions of dollars on new data centers. So as we got these earnings reports and the White House backed away from the most punitive tariffs, the whole AI complex came roaring back. And that's how CoreWeave stock managed to double in less than a month, closing at $67 and change yesterday as we awaited the company's first earnings report since its IPO. Now, I have been very bullish on CoreWeave, probably the most bullish of anybody I talked to, but even I was feeling just a little worried about the setup. You never want your stock to run too much into the quarter because then there may be too much froth into it.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.